It looks good in S1. Roger. BCS arm switch is on. Okay, Victor. Landing rocket arm switch is on. Here comes the throttle. Circuit breakers in. We have separation. Roger. Inboard and outboards are on. We're coming forward with the side stick. All looks good. Roger. I've got a blowout. Amber 3. Get your pitch to 0. Pitch is out. I can't hold altitude. Correction. Alpha hold is off. Trip selectors emergency. Flight comm. I can't hold it. She's breaking up. She's breaking.
Steve Austin, astronaut, a man barely alive. Gentlemen, we can rebuild him. We have the technology. We have the capability to make the world's first bionic man.
Alright, hey everyone. Jeff here at StopThePirates.blogspot.com. It's August 1st.
Better than he was before.
2017.
Better, stronger, faster.
But anyway, so if you own a home, you don't actually own anything as a U.S. citizen. A car, credit cards, student loans, things like this. I always tell people that too, man. Are you a homeowner? Well, they have a big, huge mortgage that they're going to be paying on for the next 30 years. And if you break down the word mortgage, it's mort engage. I think it comes from it's a French word that means death pledge. So that's what it is. It's these bankers have completely taken over things, and we've gone into this normalcy bias. That we all think this is perfectly natural. That we have to go to the bank and fill out these big, huge, long forms, and it's a one-sided contract. I was in the mortgage industry for a long time. The bank isn't on the other end of the table going, okay, here's my pile of cash that I have for you, and as soon as you sign all this stuff, put your down payment down, and we'll go ahead and deposit that into your bank account. It's not how it works at all. Credit cards, student loan, car loans. Even if you pay the mortgage off, you still don't own the home because the county or the state you live in owns a home. If you don't think so, don't pay your property taxes for about 3 to 6 months, depending on where you live, and they'll stick a foreclosure sign on there. They'll have a sale on the courthouse steps. Cars also. When you register anything with the government, you're handing over ownership to them, and then they in turn take out loans from it with that collateral. And then, of course, every year you have to re-register your car, and if you don't, the city or the state will come by with one of their policy enforcement agents that has a gun, and they'll steal your car off the street. Well, their car, really, because you're just paying to rent it, basically. So anyway, all these different types of debt began with you filling out a promissory note, which is the contract. And when this is submitted to the bank, and after the approval process, you receive that money by signing this contract. And the bank tells you quite dishonestly that you owe them a debt for that amount of money, and gives you permission to, and then you give them permission to amortize the payment of that loan over a set amount of time, usually 30 years on a mortgage. But then they also charge you interest for that convenient service. And the whole thing is a scam, because I'll get into this in a second, because they don't actually loan you anything. We have an account set up at the Federal Reserve, in one of the 12 Federal Reserve bank systems, evidence on the back of your Social Security card. And you got to have a new one. I keep telling people this. After 699, there's going to be on the back in red a letter with 8 numbers, and the letter corresponds to one of the 12 Federal Reserve banks, and the numbers is the account number. And then you could, I actually have the routing numbers, and you would want to use the funds available routing number. And hypothetically, you could use that to pay a bill. Not a bill, but you could use it to discharge. You can't really pay anything. You can discharge or set off the payment, because even Federal Reserve notes it's just a promise to pay. Because one of the biggest heists, gold heists ever in world history, was right here on our slave plantation in 1933 when they passed the Federal Reserve Act, or actually House Joint Resolution 192, where you had to go in and turn in all your gold in exchange for a fiat debt note. But it's not as bad as all that, and you do have remedies. So I don't want to make it seem bad. I get that to get your attention. So anyway, what the bank does with your note is they bundle those together and sell those as mortgage-backed securities. You know, tiered A, B, C, and D, no matter what kind of credit you have, and then they're sold throughout the world. And then there's derivatives off those that, you know, if you fail to make your earlier payments, which they're not really good bets anymore, but it's interesting. So, and then what they do is you sign the note, which actually pays, because what they do is they take that to the Federal Reserve window, and they deposit. Well, actually, what they do is they open a checking account in your name, and they deposit the note, and then as an asset, and then write a debit out of there, which is a check, and they fraudulently forge the note with your signature, and then they issue you a check. But the whole thing is just because you have an unlimited amount of credit at the Federal Reserve Bank through your exemption account. The whole thing is just a scam. And then what they do too is they take, once they usually sell the servicing rights to another company, which is usually in Delaware, I think is the main state that has it. They have different laws about this. All that money is just deposited into an account, an escrow account, and then whenever you either pay it off or sell or get foreclosed on or whatever, they wait 90 days, and then the bank asks the IRS if they can keep that money, and they always go ahead and let you keep it. So the whole thing, I mean, we're living in a giant frickin' illusion, and everything we think we're paying for isn't. Banks can't loan money. I mean, their own rules. According to the Federal Reserve Bank, and printed on their banking rule books, money is created when you, the flesh and blood person, signs a contract or the promissory note with the bank. So banks sell your note, the promissory note and deed, yeah, and then they get you to sign the deed of trust, which is they deposit your fund, the funds you make into a trust account, and then you sign the deed over to well, it's basically a power of attorney for whoever to take control of those funds. And then they sell the note multiple times. And the problem is, if you ever go into a foreclosure situation, I would definitely look into the produce the note technology, which I have volumes of information on. Go to stopthepirates.blogspot.com. So there isn't actually any money. You know, I know I've got a lot of new subscribers on my channel, and we do have many remedies accepted for value, electronic funds transfers, things like this that everybody needs to get up to speed on very quickly, because the so-called government or the bankers, they took a loan out on you when you were born, and they amortized you just like they would a note or a mortgage. And then they sold that based on the amount that they think you're going to pay into the Internal Revenue Service over your lifetime. And of course, they insured all those bonds. Bonds is a promise to pay. And if they ever default, which it looks like they're going to, the creditors are going to come for their property, which is you or me. So you want to definitely be up on this information, because we are worth money to them. And when they eliminate the debtor, U.S. citizens, they eliminate the debt. And that's the only way out. And look at where they're pushing us. So we're, I don't know, $21 zillion in debt. I mean, it can never be repaid, and they can't even make the monthly payments. Like, it's insane. And they're trimming like 2 or 3 trillion off the slaves every year. Anyway, I'm going to leave a link to this article down here. Check it out. Go to stopthepirates.blogspot.com. Thanks a lot for listening.